Welcome to Investments. We're going to be talking about short-term and long-term investments and how they're shown on the balance sheet. Short-term investments, there's two types. There's trading securities and available for sale securities. The entries to buy, to sell are pretty much the same. How to record a dividend are pretty much the same. Where they differ is their adjusting journal entry at the end of the year to mark them to the fair market value at the end of the year. We're also going to be talking about long-term investments, and there's three buckets. There's available for sale securities, yes, just like what you heard for short-term. Those are treated the same way as available for sale short-term securities. It's just you own less than 20% of the outstanding shares of stock, and you classify them as a long-term investment, meaning you're going to hold them for more than a year. If you own between 20% and 50% of the outstanding shares of stock, you use the equity method, also known as one-line consolidation, and we'll cover that as well. And finally, if you own more than 50% of the stock, you use the equity method during the year, and then at the end of the year, you will consolidate the financial statements together. If there is no market value for the stock, whether they're short-term or long-term, you use what's called the cost method, because if there's no market, you cannot market to market, so you keep it at its cost, whatever you paid for it. So that's the overview. Let's take a look at Coca-Cola's financial statement and all their different types of investments. First off, under current assets, you see cash and cash equivalents. That means that if there are securities in there, you're going to hold them for less than 3 months. And usually the securities that are included there are called trading securities, or TS for short, trading securities. And we'll talk about how to handle those. Under short-term investments, Coca-Cola says that's if you are planning on holding them for more than 3 months and less than 1 year. They get put in the short-term investments category. Again, these can be trading securities or they can be available for sale securities, either one. The important thing to know is that what they're kept on the balance sheet at is their fair market value at the end of the year. So every year, at the last day of the year, we're going to make an adjusting entry to mark these to their market value, whether they're trading securities or available for sale securities. And you make that call the last day of the year, whether they're trading securities or available for sale. Under marketable securities, notice these are still current assets, and they can be either available for sale or trading securities, depending upon the intent. And again, remember, that's determined the last day of the year. And they are kept also at their fair market value. Down further, after you've finished with your current assets, notice you have your equity method investments, and those equity method investments include both means that you own less or greater than 20% of the outstanding shares of stock or less than 50%. And so you use that equity method to account for them. You'll look in the footnotes and they'll tell you a lot more about the equity method. Other investments can be trading securities, available for sale securities, or cost method valuation for securities. So you'll see other investments, all different types, and depending upon what they are, their treatment differs. So that's what this playlist is all about. So if you're interested in the footnotes, this is what the footnotes look like, and that notice they have to give you the disclosure, whether they're cost, or whether they're equity, or whether they're short term. So in the fine print, you'll find a lot of good information. So let's get started.